Good morning. Welcome to the One Media IP Group PLC preliminary results investor presentation. We do apologise for the slight delay in starting this morning. Throughout this recorded presentation, investors are being listen-only mode. Questions are encouraged, can be submitted any time by the Q&A tab situated in the right-hand corner of your screen. Simply click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Michael Infante, CEO. Good morning.
Good morning, and thank you all for joining us this sunny morning down here on a webinar. And it's great to speak to everybody. We have a presentation that's going to walk you through both our annual results and also strategically point out the direction in which One Media is going. So without further ado, we'll get started. We have 4 parts to this presentation: an overview, financial results, operational update, and an outlook and a conclusion. First, the overview. Let me introduce the presenting team. Today we have with us Steve Gunning, our FD, and we have Alice Dyson, our COO. We are the executive team and we are responsible for the day-to-day running of the business. Our 2 non-execs, not on the call, Brian Berg, over 25-30 years with Universal and a stalwart of our industry, and we're very pleased to have Brian on our board, brings a wealth of experience. And our chairman, Claire Blunt. Claire, currently CEO of The Guardian across European territories and Australasia. Claire brings with her a wealth of publishing previous experience, having worked for Hearst, and indeed we're very fortunate to have both of these people as board members and bring, as I say, a wealth of experience to what we do. The company One Media was founded by me back in 2005, 2006. We went to the OFX market. We recognized at that time that there was a digital market growing. Apple had launched. They'd been around since 2002, 2003, and digital rights were just beginning to launch. However, they were not being monetized. We set about at that point to raise some money on OFX. We raised £1 million and off we went with our buying of digital rights. Back in those days, it was literally Apple and a few other stores. There was no Amazon, there was no Spotify they were to follow, and streaming would have been something far off into the future. Downloading was the model of what we do. We acquired under license an awful lot of content, and over the years we've converted some of those licenses to full ownership. And that's been helping us with our delivery to good performance to bottom line. The other assets that we've developed along the way, Harmony IP, which we'll talk about a little later, but it's a method of actually not buying full rights, it's a method of buying part rights, a little bit like asset release in your house. Artists own and control certain performing rights, and again we'll cover how the money is derived from our industry. And of course TCAT, our technical copyright analysis tool, which is a first in the way that a content company's got involved in developing a software business. And again, we're going to cover that a little more. TCAT is predominantly an anti-piracy tool, and it's predominantly also a tool for investigating and auditing where your content is currently being developed over the many, many stores, some 600 digital stores in over 200 territories globally. Understanding where money comes from in our industry has eluded many people, including colleagues in the industry. Primarily, there are 3 avenues of income. There is the writer's income, there is the performer's income, and there is the record label's income. They are the 3 major sources in following the money, which is important to understand. And I'll just briefly touch on how this works, and I'll give some examples. Let's take the writer's share first. And the writer's share, we always use the example of Lennon and McCartney. Yes, it would be really good if One Media controlled some Lennon and McCartney tracks. We don't at the moment, but it's a good example. The writer pens the words, a bit like poetry, and also pens the music scores that go behind the music. If we take the case of Lennon and McCartney, a writing duo, the protection of rights in their income is for 70 years after their death. Now that's 70 years after the last death in terms of a writing combo. So with Mr. McCartney still with us, the rights continue until his demise. The writer collects his royalties through a number of mechanical royalty collection societies. Here in the UK, we have the MCPS, and in every territory around the world, there are separate, under statute, collection systems for taking those royalties in. This controls both digital and physical earnings, so it will be the same on a record as it is on a stream, as it is on a download. We then have the performance itself, the recording. So once those writings, the writers have written, turn them into a recording, we then have what we call the performer rights. And those performer rights are in the form of a track, in the form of a record that get uploaded now to digital stores, or indeed embodied inside of a CD and or a record, vinyl, DAT, tape, you name it, any method of containing a recording. Those rights are collected again. There are performance royalties collected by, in this country, people like the PPL. Every time a record is played on the radio, every time it's streamed, it generates a particular right. And indeed, of course, the two rights together, the performer and the writer, if you're the Beatles, Lennon, McCartney, you'd be collecting on both of those. Finally, there's the record label, and let's use One Media as an example of being a record label. Under contract, not under statute, we'd make an arrangement with the performer to acquire, buy, and or license the rights. We would then have the job of task of uploading those to the digital stores, collecting the money on those digital stores, and then sharing whatever under contract back to the performer. Along the way, we may do deals with synchronization. That's the use of music being into movies, gaming, TV shows, any particular use, right the way down to music in an elevator, right the way down to music in clubs. There is a usage fee that's paid and then collected. So hopefully there's an understanding of following the money, where the money comes from. We're now going to talk about financial results, and I shall pass over to my FD, Mr. Steve Gunning, to pick up on this.
Thanks, Michael. So we obviously now move on to the next slide, which is the financial results for the full year. In November, we sent out an RNS confirming a trading update of a 4.4 million revenue, which is 10% up, which we were keen to see on the US dollar effect, but we also had a very good steady year. We also had a strong EBITDA performance of 11%. Obviously, with our business model, a lot of the revenue flows down to the EBITDA and bottom line cash. Operating profit wasn't quite as high, but we did have a little bit of step cost, mainly relating to some overheads to do with IT systems internally to make sure our royalty reporting and internal management information is strong and robust to help us deliver what we need from an internal and external analysis point of view. We also have a very good free cash flow yield, which is we are a strong cash generative business. Throughout the year, we spent £4.3 million over 9 acquisitions, which is 11.2 multiple. Although the acquisitions may not have been as quick as we would have liked throughout the year, we do pride ourselves on making sure the multiples we pay are what we're comfortable with, which we think is delivering future value to the investors. But we feel that there's the good analytical view on what we spending our money on. We also then were able to, as previous year, announce a final dividend, which we're very keen to, hopefully help investors receive from us our confidence in the business as it stands. So overall, I think we had a very comfortable, good year, a strong performance, and we're very happy with the main results that were delivered. We then move on to these are just some high-level graphical views of how we see the business. Now, obviously, the revenue we've touched on, we've been acquiring stuff mainly for 2019, 2020, but we've also been buying stuff previously, which we're delivering some very good EBITDA numbers. We went past the dip in 2014-15, and now we've seen 6 years of year-on-year growth, which confirms the business model we believe is strong, robust, and, as we said before, cash generative. The next slide really is a sort of pulling out some key numbers from the income statement and mainly our P&L performance. So for this year, we've obviously moved into analysing or identifying the net revenue number. So obviously the revenue number is the number that everyone looks at, but really from our perspective, we see the net revenue as being quite a key number to look at. The net revenue is effectively the revenue less any distribution charges or royalty costs. So we would call that in simple terms the NPS, or net publisher share. So that's a good performance measure for us, because really that's what we look at from an industry perspective. It's how the catalogs are delivering, and what we see as a very strong indicator on how we're doing as a business. So obviously the gross margin from that perspective is 63% compared to 61% from the prior year. We then move down the amortization of catalogs. The nature of our business is although we acquire the assets, we have to amortize them over a period of time as well. Whereas from our perspective, obviously, we believe they increase in value, which we'll touch on in a bit. Then, as I say, we have a slight step cost in administrative expenses. We don't, as a business, we have a very tight overhead management system. We don't really require to increase our admin expenses or overheads in relation to revenue. So in reality, although we can increase our revenue, it doesn't mean we have to increase our overheads in context in the same way. And then it flows through nicely to obviously a good EBITDA performance, which we were happy with, and we think is very consistent in what we're expecting for the performance of the business. Then obviously our balance sheet. I mean, we have a quite simple balance sheet from our perspective. We obviously have our intangible assets, which are what we acquire. As I mentioned, we have to amortize them, so in theory they're reducing on the balance sheet rather than what we believe increasing in value. We have a good, strong cash position. Obviously, we spent money in the year, which is noting the reason for the reduction, but we had some money at the year end, and post year end we acquired some additional IP, which was noted in an RNS. So our main point really is that we have money to spend, and we spend it in the right way with the right multiples, what we see in the correct assets for future value. And then really onto what we see was a separate process which we acquired at the end of the year and last month, was an independent valuation of the catalogue. Our industry is is quite complicated in people understanding how we value the assets. And as I mentioned, really we have to, the balance sheet doesn't truly reflect what the value behind it is. Now in the other areas, people like Hypnosis and Roundhill have taken a very similar view. They obviously have to do a certain way of accounting for the asset, but they also want an independent person to say, we believe that this is what the true reflection of what you had to pay. If you had to buy this asset in the market, what you would expect it to pay. So although technically we've got 40 million of assets on the balance sheet, it was valued by the independent valuer at 35 million. Michael, would you want to maybe add a bit of commercial view on that side of the valuation?
Yeah, thank you, Steve. I think it's generally known and understood that multiples play a big part in the way that companies go out and acquire. In the last 3 years or so, we've seen many more players coming into the marketplace and picking up content. This has pushed prices up. In pushing prices up, it doesn't necessarily increase the value. It just means you're buying at a higher price. One Media's had a policy of being conservative and taking a much longer view over the way in which it pays for its content, because prices do have a habit of going up and down. And in my 30 years of working in the industry, it doesn't matter whether it was £1 or £100, it's the multiple that is the governing point, I guess, of making a value on a product and how long it's going to take you to get your money back. The way that we've taken a view on this is to say that our blended rates over the last 15 years of buying have varied from the original ones that I spoke about when we set about buying digital rights in the very early days, up to and including the last 3 years where we've paid a little higher multiple, still within the director's expectations. The view we've taken that, or should I say the valuers have taken, with guidance from us in terms of understanding the markets, is that a multiple sitting at about 12.5 times is a way of valuing content at a grassroots level. If somebody's paying 15, 20 or 25 times, that's fine. And maybe the blended rate in the next 10 years does go up to 15 or 17. We like to value well below that to give us a bottom line position. We took 12.5. I looked at the markets along with the valuers, and Steve and the valuers then took a view of saying, if we had to buy the catalogue that we own today and we paid 12.5 times for it, that's the maximum that we would look at in terms of valuation. It's not about ramping, it's about a conservative view on valuations. So that's where we lie at 12.5 times. If I had to buy back the catalogue tomorrow of what we currently have, there we have our value. And quite frankly, if I could buy back the catalogue or a similar catalogue to what we have at the moment at 12.5 times, I'd do it day after day. Steve, back to you.
Thanks, Michael. Yes, so obviously the main point of this was really it's an industry valuation now. We try to move on to a position where this will be something we'll be looking to probably add into our things, not every year, because I don't think it has the value of a yearly evaluation process, but certainly every couple of years, or if there's a certain change in the market or the valuation process. I think it was a very useful exercise for us as a business because it helps us understand our business even more than we did before. But we're hoping to try and add into a further external understanding of the business, because the market isn't as straightforward as people may believe. Hypnosis and Roundhill are certainly helping to explain things more, but we obviously want people to understand One Media's positions in that market, where we're not exactly the same, but we're very similar. So hopefully this will help demonstrate our position in the industry, but also is something which confirms what we've said internally for a while, that we are undervalued, and this hopefully explains a bit more why we believe such a valuation is more realistic. So.
We're going to talk now about an operational update. I'd like to invite Alice to comment on our acquisitions and talk a little more about this.
Hi, thank you, Michael. So we've had a very strong acquisition strategy over the last few years. We raised 6 million in 2020 to go and acquire more catalogues, and we look to identify overlooked and undervalued content so that we can maximize its exposure and usage and ultimately improve the returns. So we've invested to date 4.3 million of that 6 million across 9 acquisitions at an average blended multiple of 11.2. And that's testament to the way that we value catalogues and look to add value to them. So it may mean that we're slower in finding catalogues, but we'll make sure that we don't overpay and that we find the right kind of catalogues that are in terms of the life cycle of the music. They've degraded in terms of all of the risk has been taken out of it, and they're an annuity-like income stream. So the largest acquisition undertaken by One Media to date was a catalogue by American country music star Don Williams, and there's over 200 tracks in that. So, and additionally, I'm sure you will have heard of Take That song, A Million Love Songs, Could It Be Magic, and I Found Heaven. We bought the producer royalties. So Michael's touched on earlier about the different income streams associated with music. And there's producer royalties, there's writers' royalties, performer royalties. So we've looked to spread our risk in acquiring different rights attached to different music. Additionally, we've acquired Barry Blues producer rights to Heatwaves, Boogie Nights, and Always and Forever. So, and additionally, the rights to Culture Club. So these all sit within, if you think about it, the 80s and 90s. So consistent evergreen tracks that are going to continue to produce very steady income streams. Good music doesn't have an expiry date. So additionally, we acquired Kid Creole and the Coconuts compositions rights, Annie, I'm Not Your Daddy. So hopefully there's lots of tracks in here that you remember fondly from nights on the dance floor. Michael, would you like to add anything?
Yeah, I'm just trying to remember Nights on the Dance Floor, to be honest. I don't know who sang that, but there we go. Yes, I think Alice has coined what we need to be talking about there in acquisitions, and that continues. That is just another day in the office for One Media, and working with artists. Our specialised areas are 60s, 70s, 80s, and now 90s. We're acquiring music that has, forgive the pun, track records. We're not buying music on the front line. Typically what tends to happen is that when a track is released, and if we took it at its highest, an Ed Sheeran track, there's a huge spike in sales for the first few years as it goes global and gathers a great following. Now, 10 years down the line, is that a one-hit wonder, or is that a track that's got real traction? We tend to look at those 10 years and older, so the spikes have actually finished, and now we're down to level pegging, and we're looking at recurring income. They are the sweet spots that we look to buy. Moving on. Where are we here? Here we go. I'm sorry, my screen has just gone a little. Okay, we're talking now about Harmony IP. Harmony IP is I suppose the initiative. It sits within us as an initiative of the way that One Media has been acquiring much of the way products that we've bought over the period under review. It's a method of not buying all of the content. And if you think about the way I explained the income that was coming in through the writers, the performance, the publishers, and the record label, artists that own the rights often own many different avenues of income. Consequently, what we get here is an ability for them to release some of their earnings and part and package of their income. So Harmony, we believe that it was a first in the way that we went out about buys a percentage. That means that we've been able to deploy our income and our monies accordingly, and we've been able to actually take a piece of the action, to coin a phrase, and start to actually get the artist to release part and package of their income without separating themselves completely from their tracks, which now after 30 or 40 years, these tracks are their babies. It is the family silver. They want to be attached to them. They get the benefit also of our TCAT, which Alice will cover shortly after this slide, and the TCAT protection that gives them almost a hidden audit trail that One Media then carries on. Because if we've bought 20, 30, 40% of the track, we have a vested interest. We want to police our side of it, which means that automatically their side is being policed. This has been very attractive to artists because auditing is a very, very expensive route. So the way that Harmony works is on introduction and meeting with our pipeline targets of artists and our producers and record labels that we work with. A deal is struck on a percentage basis or a part of they may sell us their writers' shares, they may keep their performance shares, they may keep their publishers' shares. But of course, the moment that we've got involved with those tracks, then of course we start policing them. If they take 20, 30, 40% of the income that we take, obviously we're going to have first dibs on trying to then buy the other side of the income streams that are there. This seems to work well, and we seem to form great long-term relationships with the artists and performers and labels that we're doing these deals with. As far as we're concerned, there aren't very many operators doing this. In fact, we don't know of any. It's a little bit like asset release in your house, except there's no payback. It provides artists with a valuable aligned partnership with us, and of course access to TCAT. And there's been significant interest from artists underpinning strong growth prospects. Now, what this really does is it allows them to start to plan. They get a chunk of money. They can start whatever their plans are, inheritance planning, tax planning for the future. So we believe that Harmony is a very good tool to be working with artists. It doesn't give them 100% out, but most of them aren't really wanting that at this stage. Alice, perhaps you can talk about TCAT.
Yeah, I'll just add to the Harmony IP conversation. So writers and musicians, the tracks they create are really important to them, and they love them like their children. It's a creative process, and they choose very carefully their partners. One Media is in a unique position on the London Stock Exchange, but we're also considered by the record industry as a boutique record industry that is very well respected by artists and musicians. So if you take, for example, Mungo Jerry's track, In the Summertime, it's over 50 years old. And so it's provided for Ray Dorset, aka Mungo Jerry, for all of his life. So it's older than his children. And I laugh and say, actually, it's lasted longer than some of his marriages. So in terms of how important it is to him, it's extremely important. As I say, it's provided a revenue. So when he thinks about what he's going to do in terms of planning for his future, he's going to think very carefully. And he may not want to sell all of those rights in one go. He will want to find the right partner who's going to understand what he wants for the legacy of his track, that they're going to be able to make sure that it's future-proofed. And this is where TCAT comes in. So TCAT was invented by One Media. It's a unique software tool that, because we work in the music industry, we understand the challenges that face record companies in terms of piracy. So there are over 200 different stores, DSPs, we call them, but digital store providers. And that, when we talk about that, we mean Apple, Amazon, Spotify, Deezer, all of the stores that are in the cloud. So making sure that the tracks are not being pirated is a real issue. So within those stores, if you think 60,000 tracks are being uploaded to Spotify daily, and there is no tool, or there was no tool, that enabled artists and musicians to be able to make sure that their tracks were not being stolen and misappropriated. So TCAT, which has a very dry name, Technical Copyright Analysis Tool, when we developed it, it actually stands for To Catch a Thief. And that describes exactly what it does. So we developed this platform, and it enables you to make sure your track is not being pirated in all the stores. And it's absolutely unique in this space. We put together an amazing team. Michael, do you want to just skip to the team? We put together this unbelievable team. One Media is a content company, and we acquire content. We're not a software business. And we've been in a unique position in order to identify the problem within the music industry, but then we had to recognize that we don't know how to write algorithms, and we needed to put in place the very best possible team to make sure that TCAT could fly as a business. And so we put together a team that we knew would be accepted by the music industry. So the music industry is about relationships, and bringing in a technology business that is going to be trusted and respected means that you have to have the right team in place. So we've put in place the chair, Dr. Ed Vernon, OBE, who has huge experience in taking businesses, tech businesses. He sold his business to BT Northern Ireland, and he comes with a wealth of experience and is very respected within the software and tech world. We have a CTO, Gareth Waller, who is a rock star in terms of analyzing data, putting together the kit and the stack. That means we're able to search the stores on a daily basis and draw back the results. And he heads up the technology team. We have Michael and myself overlooking and overseeing and making sure that TCAT stays on tracks and delivers what One Media's ambition is for the business. Robin Abersini is our CFO and COO, and he was actually involved with Michael in launching One Media IP back in 2006. We have Nick Stewart, who is the CEO, and he comes with huge record industry credentials. He actually was involved in signing U2 back in the day, so he's widely respected. And when he worked with us on acquisitions, and which is how we worked, he became aware of TCAT, and he actually was so blown away by what we had managed to do. He wanted to be involved in the team, and we're absolutely privileged to have him taking over as CEO to run this next journey for TCAT. We have, as an advisor, we have Dr. Benoit Hutzer, who is a rock star god in the data analysis. So he checks the stats and makes sure we're absolutely, in terms of our fingerprint technology and all of the resources we're putting together, that our mission is well led and well protected.
Thank you, Alice. We'll move to the next slide. We'll look at the outlook and then conclusion, and then we'll go to the Q&A. Let me just bring this page up. Excellent. Market opportunities continue to be a supportive growth area. There's been a lot of forecasting in the last 2 to 3 years. Goldman Sachs, specifically 3 years ago, took a view of the industry and saying it was taking $20 billion then, and it was forecast by 2030 to start looking at then $42 billion. Since then, the industry's been upgraded. There's been some phenomenal figures out there, $131 billion by 2030, and global live music revenues to reach $38 billion. All of these things point in a graph upwards. Whether or not we believe it'll be 131 billion or whether it's half that at 80 billion, it really doesn't matter when you're talking about an industry that 3 years ago was sitting at just under 20 billion. It's going places. The digital marketplaces, remains immature. We have a long way to go. We're seeing new avenues, not just new platforms and new stores opening, and the likes of Peloton and people like that are now adding significant income to the industry outside of just Apple, outside of Spotify, outside of even Facebook. We're seeing the new areas of where music is being monetized. We can talk at length about digital radio. We can talk at length about the metaverse and the way that music will be consumed, specifically legacy music that typically teenagers might not have tuned in through Spotify to listen to Bill Haley's Rock Around the Clock, but in metaverse they will be sitting in a jukebox cafe having a virtual cappuccino, and this will be playing on in the background. Smart speaker, should I say, technology. A lot of us now, don't even talk about saying, let's play this record or let's find that record on our mobiles. Walk into your house, Alexa or Google, please play this. And away the track goes. And of course, it doesn't play one track. It goes onto a playlist and plays many tracks. So we're being helped and we're being advanced in digital music distribution with technology. That's not even going into what's happening with NFTs. And it's a subject I've mentioned previously, and NFTs is something which at the moment we watch with interest. Where our asset may be available to become an NFT is something the company will start looking at towards the end of the year. At the moment, again, there's a feeling that the blockchain cryptocurrency ways of running this are still not understood. One Media is conservative. We would want to make sure that if we're going to get involved in these new avenues, that we understand them fully and that we make sure that we are able to monetize them to the best and to the interest of our shareholders. So there's a positive outlook. It's supported by accelerating structural trends and market growth expectations. We could wax lyrical for many, many hours, and I know that there are some questions, and I'm keen to answer some of these questions. So I think what I'll do without further ado is pass back to Alice to now talk about the growing market.
Thank you, Michael. So this graph actually is a really good explanation about what happened to the music industry from 1999 to 2021. So if we start at the beginning, this first column is all in red, and this is the physical market. So the record industry was all about CDs, vinyl, compact discs. There was to carry home media, DVDs. You can see over the next 10 years that there was just a shift, and then there were new colors coming in. Well, what did that represent? So you had download and other digital, and this was the new education for consumers, that there was another way to consume music. You didn't just have to listen to a compact disc or listen to the radio. So then you can see the blue, the dark blue color. Well, this is streaming. And now you can see that in 2021, this accounts for most of the way that consumers consume music. So there's been a huge shift and a huge change in behavior. And so with streaming, you have elastic walls. So there's no limit on the music that is available to you. And then if Michael's talked about the metaverse, which I get very excited about, because that adds another dimension, a virtual world where you can go out with your friends and go to a concert and listen to music, or you can go to McDonald's with your virtual goggles on and you can be served by Louis Armstrong, and then your McDonald's will be delivered by Deliveroo to your home. This is a whole world that we haven't even begun to explore properly. But within this, all along the way, music will accompany this journey and it will be monetized. So the global revenue growth has, from 2020 to 21, has grown 18.5%, which shows that the opportunity here is still vast. There's been a 65% streaming share of global revenue, which is very exciting. And then most importantly for One Media, because this is where we get income from, is subscriptions. So 21.9% growth in paid subscription revenue. Now add into that the new areas whereby you have an exercise bike in your home, Peloton, and then there's licensing opportunities there. So they're doubling up. So you're consuming not just from Spotify, but you're also got a subscription to a bike, which comes with music that we earn and generate income from. So there's lots of new opportunities, and you can see that the market is just set to grow. Consumers have been educated that they have to pay for music in this digital world, which, as you can see, there was a dip in 2010, whereby there was just a shift in understanding. We had to educate consumers that just to listen to music on your Alexa, you were going to have to pay. They've been educated, they understand, and the model is robust, but it isn't finished yet. The music industry isn't done. It's going to continue to grow. So this is a very exciting space for One Media and for investors to be in. Michael.
Mic back on. Sorry about that. Thank you, Alice. And very succinctly put, we know that the industry is growing, and we'll now draw towards the conclusions that hopefully we can begin to convince some of the viewers today that One Media is a good bet and a sound investment, with positive performance delivering a double-digit revenue growth, some strong income, acquisition pipeline. It is without a shadow of a doubt that the amount of music out there from the legacy days, whether we're dealing with artists or estates, is still out there. It is not in any way in short supply. Harmony and TCAT are proving additional income streams with strategic opportunities. Great potential. I think the backdrop remains supportive with positive outlook of underpinning dividend policy that we have. We have had an independent portfolio valuation of our catalogue. Such a strong hidden asset, hidden value. We have the TCAT question of where we're going to be going with TCAT in the future. And we've spoken and made this public that we've made TCAT now an independent business. We've made TCAT now I suppose, enthused with a whole new team that are going to take TCAT to the next levels. We're very excited about that. We're very excited also that we can take advantage of new opportunities that we've spoken about with regards to where digital music will be selling in the future, not just through digital platforms that we know today. Where music is, and the formats that if we go back over the years and we look at saying, well, it started with wax tapes, the Edison rolls, it went to vinyl. From vinyl, I suppose the next thing was cassettes to CDs, CDs to downloading to streaming. Who would have actually thought vinyl would have actually outlived downloading? Downloading now's gone the way of the dodo. Streaming isn't the final format. It really isn't. Where we go in 2 to 3 or 4 years' time, and we're not just talking about the sideways growth of the pelotons, the metaverse, the other avenues of music synchronization. It's where will the next format be? Whether it's smart speakers that continue to grow. What we do know is that the legacy music that One Media has is always there to be rediscovered, and it's always there to be taken into a new format. There are no new hits from the 50s, 60s, 70s, and 80s. It is a finite collection. So consequently, we believe that our continued investment into legacy content is the way forward. Now, whether that's something that we do 8, 10, 12 acquisitions in 1 year and deploy then we have a slow period where we consolidate. We're not about a fit and forget business. We have a team of creative technicians that sit back and disseminate the content when we buy it. They will make sure that the artwork that accompanies that content, that the metadata, which is really important, it can be discovered. So from when we take on an acquisition and we take on content, there is work to do to get that product to continue to grow and be discovered by all these new avenues. So I think that from a perspective of the way that One Media is looking forward to the future is very different to just a straightforward fund going out, buying, fitting and forgetting, and just taking in that income. We work hard every day to make sure that our content is discoverable. And as a small cap and a small business with a small team, that's kind of our 9 till 5 and what we do. So we'll be ready to take some Q&A. If I can pass back to our moderator. Let me just allow Alice and Steve just to add any final comments at this point, or even just a goodbye. Firstly, Steve, is there anything that you feel you might need to unmute if you are going to say something? If there's anything you want to add at this stage or wrap up?
I was just going to reinforce the point about the discovery. Children, certainly my children, they think they're discovering new music when they find the 60s and 70s and 80s. And this is a pattern that is repeated generation after generation. And the content within One Media's portfolio has no expiry date. Good music lasts forever. And so with One Media, this is a very sound investment piece.
Steve, anything to add?
I think it's just to confirm what we've discussed, really. I think we have a very healthy, strong business in One Media. We have some positives on the side with Harmony IP and TCAT. And I think the independent valuation helps hopefully educate the market in what we have. So it's sometimes slowly steps, but I think we're getting there to progress to the next level and hopefully prove the value that One Media has. So other than that, I think thank you, everyone.
Thank you. Thank you. Just as a final note, because my father wouldn't forgive me as being the eternal salesman, you know, it's very easy to buy One Media shares these days. You don't need an expensive broker. You can go online and you can buy. So we'll be ready to take your orders after the show. As they say in most theatres, merchandise is available in the foyer. Thank you for participating today.
Michael, Alice, Steve, thank you very much indeed. What a great way to end the presentation, or the formalities. But anyway, look, thank you very much indeed for the presentation. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated in the right-hand corner of your screen. Just while the company take a few moments to review those questions submitted already, I'd like to remind you that the recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. And Michael, as you said, we have received a number of questions from investors today, and thank you to all those investors who've submitted them. And if you do have a question, please continue to do so. Can I please just hand back to you, and where appropriate to do so, just read out the question and either give your response or direct it to one of the team, please?
Yes, thank you. We'll take the first question that is here. It says, why is the fundraise for TCAT being done in the subsidiary company? Why not a fundraise on AIM? What is the nature of the funding, equity in TCAT, debt, something else? This is from Paul B. There's a lot there to disseminate in a simple answer, but let me try and address the reasons that we put TCAT into a separate subsidiary as a limited company sitting within the group. Firstly, we're a content company. We raise money, which was EIS and VCT money, to buy content. We've discussed that earlier. All the money that we've actually supported into TCAT has not been part of that fundraiser. And we didn't want confusion to say, are we raising money for content? Are we raising money for a software business? So we've used our hard-earned to support TCAT to this point. We believe that TCAT is going to be best served by being independent. As a record company ourselves, it's going to be always slightly awkward with TCAT being a subsidiary and then trying to help the rest of the industry. So giving it its independence was the first thing. The second thing was that we needed to raise money. We were using EIS and VCT funding. We already have advanced approval from HMRC that TCAT is a qualifying business for EIS and VCT. One Media needs to drop below 49.9% for that to be so. The last part of the equation as to why we didn't raise money through Topco is the question that haunts me every day: is our share price. Our market cap is not recognized. Today, we have said that we've discovered a valuation within our catalogue. It's an extra £20 million over and above what sits in our balance sheet at the moment, in our asset sheet register. We also have TCAT itself, which doesn't have any reflection of value at the moment within the business. So enhancing and putting TCAT out there was a way of not diluting those investing in content at a share price of 6.7p, raising money, diluting those content holders to go into TCAT. And with regards to it going through a debt or loan from the company, we already do have some loans in TCAT. Part and package of its independence will be to repay those loans. One Media also has a management position, albeit as advisors in TCAT. That will sit there so we can keep an eye. And also we will be in perpetuity customers of TCAT. That's really important to us and our clients. Finally, One Media does have a royalty that comes through from TCAT. So we will be working with TCAT very closely. We think this is the best way forward as a small cap. As I said, we're not a software incubator house, and we think we're absolutely on the right track. There's a second question, which is, again, a TCAT question. TCAT looks very interesting. What is currently in the market offering in this service? and how do you expect to compete, disrupt here? What is the business model, and how do you think you can take the market share? I'm going to ask Alice just to talk initially about what TCAT and the market offering of this service is, with whom we're currently and have been on trial basis. There are certain confidential things we can't answer, but Alice, if you could just give a brief overview of the market offering of what TCAT does.
Okay, so thank you, Michael. TCAT does metadata and fingerprint searching within the digital store providers. And we are the only company in this space at the moment. So we have a first move advantage to land grab this opportunity, which is absolutely our intention. There are other providers in the marketplace who do something similar, but not the same. So there's anti-piracy within royalty that they identify within YouTube. There's things like PEX, there's Audio Magic, but they're not the same. So they offer similar services, but they're not in the space that we're in. And this is where the real opportunity lies with TCAT. Because if you think about piracy outside of digital stores, there's no money to go after. Whereas within digital stores, there's revenue and there's royalties being paid. And if that money is being paid to the wrong person, you've actually got something tangible to go after. So whereas the BPI will shut down pirate torrent stores, there's no money to go after. The best conclusion is that they're just taken down or they're moved from Google search. But within the DSPs, there's actually real money to go after and real people to hold accountable to and call for accounting regarding the tracks that have been misappropriated.
Thank you. I think also, Alice, could you just talk a little bit about the street date report system as well, with the positive side of TCAT, not just the infringing?
Yeah, absolutely. So I mentioned earlier that 60,000 tracks are being uploaded to Spotify daily. So how do you know that they've arrived in all of the territories at the right price at the right time? It's very difficult. There's no solution currently. TCAT offers, we call it the street date report. So if you think that you've got a new release coming out on Friday, which is the global day for tracks to be released now. So how do you know that it's made it to store in time? You're doing a concert, you're a global artist and you're doing a concert in America that night, and your new track is meant to hit stores in order that you can benefit from all of the promotion around that track. But it didn't make it to store. So what's going to happen? Well, TCAT actually can identify those issues, and it provides an exceptions report so that there's an action you can take to make sure that that track is back live, doing what it needs to do. It also makes sure that no other label at the same time has delivered into that same territory. So if you think that you had the same track delivered twice into the same store, that's going to split your market. That's going to affect your chart positions, and it needs to be dealt with very quickly. So TCAT is the only solution that can deliver that information so that you know what to do and you can fix the problem. So we deliver this service. There are 3 major record companies globally, and we work with 2 of them. So they don't have a solution in-house, and we're able to provide that solution for them. Additionally, we work for one of the largest distributors globally. So in terms of, they're not looking to build this software internally, they look to third party this service. And at the moment, we are the only people in this space.
Thank you. Just a very last mention on TCAT before we go to the next question. The pirates haven't gone home. They haven't packed up their tents and gone home. The pirates are still very active, as Alice has mentioned, within plain sight on the digital stores. One of the more worrying things facing our industry at the moment is fake uploads and metadata hacking. One can assume that if you're a pirate and you've been used to drawing people away from the legitimate stores to the Pirate Bay or wherever, where you are downloading and streaming content from, where nobody's being paid, if suddenly business is down, which it is now, that streaming is now the 65% of the way that the global listeners, I guess, consumers now take their music. So the pirates are working busily by uploading music, changing the metadata, i.e. changing the idents and diverting where money may be going to the rightful owners. TCAT at the moment is the only tool that can detect by fingerprinting and bringing back results and checking and comparing our clients' version against those that have been changed. That brings back many matches, and that's only really set to grow as time moves on. Thank you. We have another question regarding from Andy M. Is the market to buy rights more competitive with the likes of Hipgnosis? In actual fact, the market is more competitive, but I have to thank Merck and the team, because what they've actually done is brought music currency and brought awareness to our industry. 3 or 4 years ago, One Media and others would have been unnoticed. And right now, there was a global gold rush. Yes, it's pushed prices up. Alice comes up with a great analogy whereby we say that if we were going onto an aeroplane and we were going up onto that plane, Merck and his team would turn left and go into first class and buy Madonna and Neil Young and everybody else. We turn right and we go down into economy. Now, that's not in any way saying our rights are any worse or otherwise, but we're dealing with a whole different set of targets that perhaps not on the front page of, say, Hipgnosis, Roundhills or others, those with much deeper pockets. I'd like to say to them, in a few years' time, we'll be worrying them more than they'll be worrying us. Finally, last question we'll take today from David S. Can you please provide some case studies re TCAT? How much piracy or misreporting have you typically uncovered at DPSs? A lot of the work we're doing on TCAT here is highly confidential between us and the clients. The case studies that we have done have been used to demonstrate to our target clients, to demonstrate working in tandem with them. The content is theirs. The content is provided to us. We upload and we search and we bring back the results, which then prove to them that there may be a problem, and often there may not be a problem. It may be unmolested. If we look at tracks that are going to attract a problem, those problems usually are on frontline, maybe the top 20% of music that's being distributed today. Are the problems lying in the lower levels? No. But TCAT then works in two ways. It'll work in a way where it's discovering products that are being attacked in the top 20% of releases. In the lower levels, where people want to discover what's going on, they may not being hacked, but where their problem is where their product's being made available. It could be being ignored in territories, as Alice mentioned in this street data report. To that end, part and package of what TCAT are going to be doing is to service both ends of the market. It already has created its own dashboard for the major record labels that we're working with. They now can upload and ingest their own queries, which remains confidential to them. Now, that service is open to all record labels. But of course, to an independent, if you're just a guitarist in a pub band, you're not really going to be able to afford that subscription level. So what we're looking to do with TCAT over the next 18 months is create a mobile app, do TCAT Lite if you like. Artists will be able to drop in 1 track, 2 tracks, 3 tracks, get a heat map of where they're being sold, have a little look at popularity indexes, and more as more platforms are being worked out. We may be able to tell them, yes, this is streamed 1,000 times on Peloton, but that's something that we're developing for the future. It isn't a dream, it's happening, and it's something which we will be developing, and TCAT Limited as an independent business will be keeping the market informed onto that. So I think that concludes the Q&A. I think I can pass back to our moderator, and again, just thank everybody for their time and efforts today of joining us.
That's great. Look, thank you very much indeed for answering all those questions. And of course, any further questions do come through for investors, the company will be able to remove those and we'll publish responses where appropriate to do so on the Investor Meet Company platform. Michael, perhaps just before redirecting investors to provide you with some feedback, which I know is particularly important to you, could I just ask you just for a few final closing comments, please?
Well, yes. I mean, in the famous words of Warren Buffett, the stock exchange, effectively is a voting machine and a weighing machine. I think we need to canvass more votes for our share price and our following. It's disappointing to the board, and I'm sure to shareholders, to see after the announcements recently that there isn't more enthusiasm at our level of the market. So I really would like people to take a better look at One Media and to understand who we are and what we are and how we can change things by not just being a sit-back fund that just invests. We work very hard. We sweat our assets in terms of the way that we want those products to be up. we ensure the integrity of the content once it's up on the stores, and we ensure actually that all participants are receiving their royalties. We are very much a fair play company in that respect. So I would welcome any direct content at any time. My email address is michael@onemediaip.com. Feel free to email me. I'm ever so accessible, and I welcome any questions. And I know Alice and Steve would be the same. So, you only have to substitute Michael for Alice or Steve . So we're not hiding anywhere, and we'd welcome any contact. And again, thank you very much for today.
That's fantastic. Michael, Alice, Steve, thank you indeed for updating investors today. Could I please ask investors not to close the session? It should be automatically redirected to provide your feedback in order the management can better understand your views and expectations. This will only take a few minutes to complete and I know is greatly valued by the company. On behalf of the management team of One Media IP Group, we'd like to thank you for attending today's presentation. That concludes today's session. Thank you very much and good morning to you all.